Hello and welcome to today's Crossing Borders broadcast. Before we start, I just want to thank those of you who joined us yesterday. We had a few technical difficulties, but we did manage to get through in the end. If you want to see yesterday's edited session, then please visit our YouTube channel by searching for Investment Migration Council, and there you can view all of the previous sessions that we have run so far. Remember, you can also ask questions in the GoToWebinar panel, which is located on the right of your screen, or send us a message on Twitter using our handle @IMCouncil. So today I'm joined by Daniel Huber, who's replacing Dr. Christian Kalin, who unfortunately can't be with us. Daniel previously ran the equity derivatives desk for Credit Suisse in Switzerland. He is an expert in the marketing of complex financial products to institutional clients such as banks, insurance companies, pension funds, asset managers, and banks. Welcome, Daniel, to IMC Streaming.
Hi, Bruno. Pleasure to be here.
Many of our viewers, Daniel, will know that Henley Partners is, of course, a global residency and citizenship planning firm. But what is it that you do exactly at the firm, Daniel?
I'm with Henley Partners for about 4 years now and run European government advisory. Also, I'm the head of Henley Partners Agent Services, the third-party distribution arm of the firm.
Perfect. So you're going to talk to us about enhancing the reputation of investment migration, where there is, I can personally testify, quite a lot of work to be done, particularly with policymakers and legislators, not only in Brussels at the European Commission, but also increasingly at the OECD in Paris. But before you start, I want to ask, what's driven the negative reputation of the industry in your opinion, as a banker with 20 years experience and now with about 4 to 5 years experience in this particularly niche industry of citizenship and residency planning?
Yeah, well, for the past years, I've been working with a number of sovereign states, and what regularly came up is a concern over this reputation of investment migration in general, and also the industry that focuses on it, namely us. But I will go deeper into that subject if you allow me a little bit later on in my speech.
Okay, brilliant. Well, look, let's just get started then, Daniel. I think you've got a talk for us about 20 minutes, so let's not delay, and the floor is yours.
Many thanks, Bruno, for this opportunity to engage with the industry and our wider stakeholders through IMC streaming. I know you all were expecting our chairman, Dr. Christian Kalin. I'm afraid that he has asked me to deputize at short notice. Don't worry, it's not healthcare related, just an unavoidable clash.
It's good to know.
I hope you will be able to manage your disappointment and stay with us. And as I said, for the past 2 years or so, I've been working with a number of sovereign states, advising them as to how investment migration could enhance their economies, create fiscal and monetary optionality, and also drive significant societal value. As you probably know, we call this dynamic sovereign equity.
Welcome to the webinar. You have entered as an attendee in listen-only mode.
Something that has continued to come up in our discussions has been this concern we mentioned over the reputation of investment migration in general, and also our industry that does focus on it, and how this influences the geopolitical and commercial perception of the sovereign state. This mirrors my previous experience in both investment and private banking. Bankers knew about investment migration, but it wasn't perceived as a high-value service and was seen as a bit Wild West, or more properly back in the late 90s, Wild East. I would therefore like to focus this conversation on how we can all enhance the strategic reputation of investment migration, both through operational development and through positive communication. As our industry expands and evolves, it is incumbent on us not to insulate ourselves from the challenges we face, but to embrace them. We have developed to this point, and now is the time to occupy the space we inhabit boldly and to champion actively the many positives that investment migration brings about. When critics peer through the doors of our industry, they are rather fond of attacking investment migration programs from the point of view of an anti-money laundering crusade. Unless we engage intelligently with our critics, we risk allowing external forces to dictate the narrative of our industry. We have to tell our own story, or it will be told by those who wish our story to end. But it is very clear that the highly successful story of investment migration will not end, no matter what. Our greatest detractors falsely claim that our industry assists in facilitating money laundering, backdoor criminality, and even terrorism. We know that thanks to the efforts of the vast majority of the industry, these fears are not based on the real facts and completely overplayed. If we can operate to the highest of standards and combine this with more robust communication campaigns, I believe that we can successfully move the needle of the public perception meter in a positive direction. This is certainly needed because the facts speak for themselves and in our favor. It is important for us to demonstrate that we take the concerns and fears of the European Union and of ordinary citizens seriously and actively demonstrate that our industry is designed for positive outcomes. We have been relatively successful in convincing some critics that investment migration is not bad. Now we need to demonstrate proactively that it is in fact very good. It helps both individuals regarding their freedom of movement and personal mobility, as well as states to attract foreign direct investment, as well as talent that they otherwise would not have been able to attract. It is a true win-win situation. There's something we should all work together on. We want to enhance the strategic reputation of investment migration. It's vital that we don't just talk the talk, we have to walk the walk. The unfortunate truth is that until now, investment migration programs have been sitting ducks, easy targets for the types of attacks we have seen in recent years. If we are going to set the record straight about our industry, I believe that we have a number of primary responsibilities. Our first issue is that we must recognize that while the risks our industry faces are massively exaggerated by our detractors, the combination of residence and citizenship and capital could potentially create a unique opportunity for nefarious action. We must recognize the potential risks, and we must all publicly commit to as near total mitigation as is possible.
Yeah.
Secondly, we must therefore redouble our efforts to run and operate our industry with an absolute commitment to best practice. corporate responsibility seriously. We have to take accountability for who we choose to work with, and that means taking a systemic approach to risk identification and risk management.
All right. Can I just ask on that point then, because your background is, I think back 20 years in the banking industry, which progressively has gotten, certainly in the European Union, we were chatting a little bit earlier on, highly regulated, particularly post 2008. What would you say would be some of the lessons or best practices that can be taken from highly regulated environments such as banking and then transposed into a niche markets like investment migration?
Well, I think a really important lesson we can learn from banking and finance is if we look at the crisis in 2008, and you know how this turned into complete overregulation in some finance places, especially the European Union. And I think that's the risk if you don't take self-regulation really seriously. I think self-regulation is a great start, and it's extremely important. And you can see that when you do self-regulate properly, like for example in the world of finance, the CFA Institute is a great example, actually from the asset management world, on how to really improve the industry, make it really very credible by self-regulation.
The CFA being the Chartered Finance Association?
Financial analysts, yes.
The financial analysts. Okay, thank you. Mm-hmm. I agree with that.
Thank you, thanks. Well, and finally on best practice, we had 3 points on best practice. And my final point here is that we must urge sovereign states to adopt the highest possible identity verification and due diligence standards. If a sovereign state decides to lower the contribution threshold or time taken over applications to gain a competitive advantage, then we all suffer the consequences if those standards can be used as a means of attack by our detractors. Now, my third and final point is the way our industry is perceived needs to change, and we can be the primary agents of that change. The responsibility is ours to be smarter, more bullish, and more proactive when it comes to educating key stakeholders and the wider public about the many benefits that investment migration programs can and do bring to the countries that host them and their citizens. Now let's be positive about our industry. This is the story we all really want to tell. Let's consider investment migration as a force for good in global macroeconomics, especially in the post-COVID-19 scenario. Investment migration is a multi-billion-dollar industry that drives significant liquidity streams and creates real societal value. The contribution of residence and citizenship programs to a nation's economic and fiscal health is profound. It is estimated that investment migration has delivered approximately 25 billion euros in foreign direct investment to EU countries alone since 2010. It is also widely acknowledged that residence and citizenship programs provided critical assistance to their host countries in the aftermath of the 2008 global financial crisis and the European sovereign debt crisis.
Yeah, I completely agree with that. Probably one more point is regarding the Caribbean states. In fact, if you look back just to 2017, a small country like Dominica, which was hit by Hurricane, I can't remember the name, I think Hurricane Mary or Maria, which devastated the country. And a lot of the sovereign, that a lot of the wealth was generated from the citizenship program was used to rebuild basic infrastructure like roads, bring potable water to the nation, rebuilding hospitals, improving school facilities as well, which actually goes in line if you look at the UN Sustainable Development Goals. That's in itself is about 4 of those goals being serviced by the citizenship by investment industry. So I think it's a good point. Yeah.
Absolutely, absolutely, and we think you know, the same will now happen following the coronavirus pandemic and its profound economic impact. I mean, you mentioned some of the numerous examples of countries that are outperforming their neighbors due to their hosting residence or citizenship investment programs. Others are Antigua and Barbuda, Cyprus, Greece, Malta, Portugal, St. Kitts and Nevis. In each case, investment migration has produced impressive results that ultimately have led to an improvement in the lives and livelihoods of the people who live in them. Unlike other forms of sovereign financing, investment migration has the unique capacity to bring essential capital into a country. And herein lies the difference. This is done without compromising that country's environment or its sovereign autonomy. Investment migration is unique. It gives governments a platform to repay their debts and invest their capital in other sustainable futures such as green energy and agriculture, creating new cycles that are more likely to be sustainable. And as governments create their own sustainable cycles, they become less dependent on external aids, freeing them up to be more independent entities, which means they can provide better environments and more sustainable lives for their citizens. And this brings me to my final point. Even before the coronavirus pandemic, sovereign states needed capital. Ideally, this is debt-free capital, and all are in competition for foreign direct investment to diversify their economies and generate new opportunities for their societies. All of the sovereign states that host investment migration programs will be in even greater need of capital in the aftermath of the pandemic, especially as tourism and hospitality make up a significant percentage of their economies. These sectors have been decimated literally overnight. Unemployment figures are soaring, countless jobs have been lost, and many others are at risk. As a result, corporate and personal income taxes will be down significantly. Infrastructure is already under tremendous pressure, and this is only going to increase. We believe that post the COVID-19 crisis, there will be a marked increase in interest shown by sovereign states in the positive optionality provided by investment migration, which we refer to as a sovereign equity. Now that the benefits of hosting residence and citizenship programs are clear to see, with many countries having successful track records lasting several years, we anticipate that more sovereign states will seek to design and set up such programs. It could well be that the post-COVID-19 support provided by investment migration will speak for itself and do as much to enhance our industry's reputation as anything else we ourselves can do. In the meantime, I urge everyone to be industry champions and highlight the benefits at every opportunity. There is much to take pride in. So, thanks a lot for your time. I know that Chris holds this subject very close to his heart and would be delighted to engage on it on a one-on-one basis. And
Yeah.
Bruno, I believe that you have some questions, maybe?
Yeah, I've got a couple of questions. I want to open the floor up to the audience as well. So if you do have any questions, please remember, just use the panel on the right of the GoToWebinar platform, type your question, and we'll get through that. Or else you can always use Twitter using our handle at IMC Council. We'll get through one or two questions there. I just want to go back to the beginning of your presentation, Daniel. And I know, and you know, that there is a perception challenge within the industry that clearly needs to be taken very seriously by all the players. But from your perspective, isn't that a little bit of a negative way of thinking on this?
Well, I mean, it was the speech of Chris, but I'm in entire alignment with it. More seriously, I think you'd have to have your head in the sand not to understand that investment migration is seriously unpopular with a constituency that has the power to fundamentally damage our industry.
Yeah.
And as a friend of mine uses to say, an ostrich that puts its head in the sand can still have its arse shot off. You see, however, that's just one aspect of this. I think there's a positive future for us as a fully regulated industry. And again, looking back on my banking days, investment migration is effectively an unregulated capital market. That's a problem. And in our case, in particular, we also deal with a major legal and philosophical concept like citizenship.
Yeah.
I mean, if you have a bit of an understanding of the way capital markets have developed over the last 50 years or so, I think we should welcome regulation, and we should really push for regulation and self-regulate seriously ourselves, because it gives the industry an institutionalized future.
Yeah.
I'm not sure. I'm sure I'm not alone in this, but there's two ways, to make money in the markets. You can go high risk and try and maximize returns in a short time, but sooner or later you probably go bust. And given what we do, that's also extremely dangerous. Or you can take the regulated approach, take the industry seriously.
Yeah.
There's still significant returns to be made, just a bit over a longer time period.
Yeah. I think that's the approach of a Swiss banker, isn't it? Conservative and prudent.
I'm meant to be so.
Look, I got another question, but sort of more towards the end of your presentation. I talked about potentially the market opening up wider, being more interest generated from clients, more countries are interested in creating programs. Yesterday, the UK Independent newspaper reported that airfares are likely to increase probably by around 50% as airlines adapt to strict new rules to reduce the spread of COVID-19 in the years ahead, which may include onboard social distancing rules and quarantine areas on aircraft. So added to that, the IATA chief executive commented that this was going to be a complete shift in airline business models as they are today, and that by actually reducing the capacity by almost a third is obviously going to severely impact the revenues and potentially the viability of global air travel for the masses, which we all know came about in the early to mid 1970s. How will this impact the investment migration industry from your perspective? That essentially, partly depends on the ease of travel access. So being, able to get onto a plane at very short notice and fly, 10,000 miles, and you may have 3 or 4 options on a single day for that sort of flight. So how do you think this is going to impact the industry?
Well, I mean, obviously, this still is all speculation, really, and we can't really treat one article as gospel truth. But let's speculate that air travel does become more expensive. For investment migration professionals, I don't really think this is going to be as concerning as it is for multiple other industries, such as leisure tourism, hospitality, or even international consulting firms. Actually, I think one could argue that the capital that we raise for sovereign states will become more important, as many of those sovereign states that run investment migration programs also happen to have significant leisure and tourism industries. And our client base basically is high net worth. They will continue to travel to either expand their corporate and wealth portfolios, for leisure, for family development through education, and so forth. And really, very unfortunately, as is often the case with this sort of macro issue, the personal challenges will unfortunately be faced by those lower on the social economic scale. On a similar note regarding travel and physically entering countries, it's clear that certain governments have seen that there is a short-term commercial advantage to not having to enter the country when applying for an investment migration program. And we can see marketing to drive certain programs pretty heavily. I mean, my concerns here are primarily around the optics. I just think this is something we need to keep constantly on the radar.
Okay. No, let's get to some questions. We've got quite a few questions here. We've got a few hellos from India, from Pakistan, from the United States, from Washington, from Taiwan. And then I have a question here from Dubai, from Jennifer Kent. It's not a question, it's a statement actually. She said, I couldn't take part yesterday as I have actually recently just finished my certificate in investment migration. So congratulations, Jennifer, on achieving your certificates. Moving on to another question. Which countries do you anticipate will launch programs in the near future, Daniel? And that is from Ursula Barzi.
Well, to be honest, in the near future, I don't have such an anticipation, I'm afraid. I think in the very near future, it will be difficult. I think by the beginning of next year, we will hopefully have quite a few countries in Europe, in Asia, and of course, hopefully also in the Caribbean. But I cannot name currently concrete examples, also because I'm obviously involved professionally with some of these countries.
It's always nice to have a few leaks come out of these broadcast programs, but nonetheless. Another question is from Eddie Leviton. I think, this is interesting as well, is that he says that it's interesting to hear the view that investment migration could increase post COVID-19 crisis, but there are challenges on preparing documents and crucially in ensuring verification and due diligence when travel and infrastructure is restricted. How can the industry overcome these challenges?
Yes, I mean, that's very true. And we're working actually with a number of governments in this regard to overcome exactly these challenges and to find ways on how to mitigate the problems with travel restrictions and social distancing, while still, keeping the process in terms absolutely proper in terms of due diligence, identity verification, and all that. But thankfully, and I mentioned that a little bit in the speech before, technology can really be a game changer here.
Yeah, I agree. And in fact, it's interesting because if you look to the example of the Caribbean nations, many of which have been very badly hit by hurricanes, and let's face it, they live in geographical regions where they are prone to devastating hurricanes. Many are already quite equipped to move straight to home working or have contingency crisis plans in place, which heavily involve technology. But I think what my perspective is that, what the world has learned in the last, 4 to 6 weeks is quickly how can we start working from home and use technology, leverage that technology available to our advantage. So everybody's suddenly, very competent on Zoom, on GoToWebinar, and the other channels that are available for us to keep in touch. But certainly technology is one to look out for in the future to better prepare ourselves for the next global crisis. And we're moving on to a comment from Mark Donald to you, Daniel. What do you feel could be the changes in visa-free countries post-COVID? So we talked about countries effectively closing their borders. Potentially, could we actually see the end of Schengen?
I don't. No, I don't even think that this is a catalyst. I think, I mean, in hindsight, the world was maybe a little bit unprepared. Well, obviously, it was unprepared for this kind of crisis. If you look at how Asia reacted, I mean, and you see that they've had a bit of experience in the past with this, and that's why they've done things much more smoothly and more efficiently, I think, in many regards. Frankly, I think the closing of borders within Europe has rather been a slight, maybe too hard of a measure. I think in an next potential crisis, we could probably do this without closing borders within the European Union, I suspect. So no, personally, I don't think this is the end of Schengen. I also don't think this is the end of visa-free travel. It's obviously a little bit more difficult now for a time, but I don't think that globalization is set back much by this, to be honest.
Okay, it'll be interesting when the visa-free indices reports start coming out in 2021. I know Henley publish a report on visa-free access, and there are other companies that publish these reports as well.
True.
So it'll be interesting to see how that's changed. We have another comment from Ambrose Muscat. He says we should be similarly regulated as private bankers. So that's a comment from him, essentially agreeing. Let me move to something else. And we have a comment, or probably a question actually, is from Shafiq El-Bekhi. Any updates or news on the Moldova program? Is that one that you're involved with as Henley Partners?
Yeah, we stay in touch with the government, and we hope that we will see progress in the right direction. But again, that's something I cannot really comment on publicly at this stage.
Okay, and then we have comments from Inigo de Cantacruc in Madrid. Congratulations, Daniel. Nice to meet you this way. I agree with you about air travel, but I think the problems is to fly because of administrative conditions are not going to help our industry. Do you think that an immunization passport is going to be a good solution? And actually, we had a similar question from somebody else. So do we see a future for immunization passports?
Sorry, what's the name of the passport?
An immunization passport.
Oh, right. Yes, of course. Well, I don't know. I think it's almost a philosophical question in many respects. Maybe in a very short term, it could be used to soften the effects of closing down businesses and stop travel to a certain extent. but I think it will not have a big impact medium to long term. It's, if anything, it's a short-term solution, and that hopefully won't be necessary anyway anymore once we hopefully have a vaccine in a 1.5 years or 2 years. So I think anything that solves problems that are shorter term than 1 to 2 years is a kind of a short-term solution. And don't forget that air travel, at least being in the airplane itself, is an extremely safe form of travel, because I mean the airplanes themselves, they have very, very good filter systems where unless someone sits right next to you, it's highly, highly unlikely that you get infected, even if some other passenger on board has the virus. I mean, if you look at air crews, you will see that that they're probably less affected on average than the general population, which is still pretty low, considering their air crews and they're in touch with so many people.
Okay, all right. And then we have a comment from Kaisha Inns, who many of you would remember was the chair of the Grenada Citizenship by Investments Unit up until last year. And she's an attorney based in Grenada. And she says, hi, Bruno, as part of their resilience strategy, all Caribbean countries that have CBI programs are operating online in spite of lockdowns, or we know that there are many emergency measures, states of emergencies that have been announced by Caribbean countries, but the programs are running normally through an online system. And I think actually for the most part, reading some of the stats from the World Health Organization yesterday, in terms of the rankings and the numbers of cases of COVID-19, the Caribbean is doing pretty well. I think there's only maybe 1 or 2 cases in Grenada itself, and I think just only about 12 in St. Kitts. So those guys are doing really well to manage that, but they're operating as normal. And we're moving on because I'm conscious of the time. Let's have a look here. From Rohit Kapoor, Daniel, how do you think we should change our marketing strategies until these change circumstances prevail? How do you think we should be adapting our marketing strategies? Daniel, you're an expert in marketing structured financial products. What's your perspective on that?
Well, I mean, I probably wouldn't react too aggressively. I mean, obviously, one could argue that especially citizenship, but also residents, I mean, will in the aftermath of this crisis play an even bigger role, to have flexibility and have safety and security. Because obviously right now, if you want to travel somewhere, you need to have residence there or be the citizen of that country. And then typically you have to go into self-isolation for 2 weeks or so. But if you're a citizen, or if you have a residence, especially a permanent residence, then you can go to that place usually. So if you will, I mean, this could be abused as a marketing argument, but at this stage, I think we still have plenty of good sort of old arguments that for the type of clients that we serve, high net worth individuals in general, are still very important and very relevant.
Okay.
So I don't think, frankly, we have to reinvent the wheel here because of this current public health crisis.
All right, so just people should be a little bit aware, but not too aggressive in changing the way they make their changes. All right.
Yes, I mean, yeah.
And then coming up to the final comments here. This is from Ursula Barzi. She says that poor perception is due to lack of transparency first persons to receive these passports via the programs, and then how is the money spent, the income that is generated from these programs. What is the IMC and Henley and Partners doing to advocate more for transparency? Well, if you don't mind, I'll probably take that one. We've been doing a lot of work in the past 12 to 18 months advocating for more transparency. We've done a lot of research on this as well, and we've also in the past 6 months launched 2 research reports. One is on the due diligence in investment migration. That's the current trends and current practices, because in June last year, during the Investment Migration Forum, we created a joint working group with BDO, Refinitiv, and Exeger on studying the levels of due diligence that are undertaken within investment migration programs by agents, but also by governments. That led us to do a second set of research on the and publish best approach and minimum standard recommendations for agents and governments to follow. Both these reports, incidentally, are available free of charge and downloadable on our website. So please go to our website and download the research that we have available. We've written to every single government that has a citizenship or residency program. And whilst the IMC doesn't have the powers to enforce governments and agents to follow the standards, the feedback has overwhelmingly been positive, and we know that a number of governments have certainly taken on board many of the recommendations that we have made. For us, ultimately, what we see is a standardized approach to due diligence, as you have in the banking environment, as you have in the pensions, and you have in the securities environment, which will give policy legislators more assurance that there is a standardized approach to how governments and agents deal with applicants. And it goes all the way from who the person is, the proper KYC procedures, and the source of funds. So that's the first part. The second part of the answer is we still have a lot of work to do here. Certainly in terms of how are governments spending the sovereign wealth that is generated by these programs. There is still a lot of lack of transparency in how the monies are spent. We know broadly in the Caribbean, they're often used to improve infrastructure projects, and I spoke about how we should be making more links with the Sustainable Development Goals that the United Nations have agreed to. That's 190 90 countries that have agreed to a set of 17 goals that need to be achieved in the next 10 years. And we are beginning some research on mapping the Sustainable Development Goals to the investment migration industry. We've created a very small task force to further research into this area, and we hope with that we will have recommendations for governments, and that will lead to further transparency on how the monies are being sent. So that's what we are doing at the IMC. Daniel, I don't know if you want to add anything to that from your perspective as one of the larger citizenship planning firms.
IMC is really, I think, doing a fantastic job, and you made excellent points. And I think the key is that it's really being, is embraced by the industry and by clients actually, and that's, I think, the key. And I mean, to go back to this example that I brought before, but the CFA Institute is. If you look at, currently, I think in banking, there is no portfolio manager who doesn't have the CFA title. And you know, that does come along with, you know, you can also lose the title if you don't, you know, hold up to the ethical principles and you know, don't do things properly. So I think, you know, this is a good example of where we, you know, the direction we should take. And I think we're on a good path.
Okay, good. So moving on, and this will be the last question. If I was an immigration agent and a referral partner, for example, Henley Partners, how would the course help add value? Okay, so that's a question about our investments, our certification in investment migration. So I think we'll deal with that separately because it's not entirely relevant to this discussion. I think last question is, somebody asked about the Maldive Islands, beautiful, the Maldives. Should that be on the radar of a new CIP or residency program? Do you want to take that?
I've actually never been there, and I always wanted to go. I heard there's great offshore surfing, but I honestly can't say anything about, you know, what. I honestly, I just don't know. Yeah. I mean, it certainly should be on the radar. I mean, like many other beautiful places, but I just don't know.
That's what I was saying. Maybe once the skies are open again, we can all meet up the investment migration forum.
Well, apparently I can't go anymore because, you know, the flight's going to be prohibitively expensive.
50% more. You'll have to take 50% less of you and less value. All right. Well, thanks very much for joining us, Daniel. I realized that you were put on the spot at the very last minute today, but I think we had a really interesting discussion. Lots of brilliant questions from the audience. Please remember that we have recorded this session and it will soon be available on our YouTube channel. And then finally, if you're not already a member of the IMC, please visit our site, investmentmigration.org, for information on how to join us. If you are a member, visit the site anyway, because there are lots of daily updates on what's happening in the industry right now. We'll be back next Wednesday at 2:30 Central European Summertime. So until then, stay home, stay safe, and have a great evening if you're watching us in Asia, a very good afternoon if you're watching us in Europe and the Middle East, and a very good day ahead if you're watching us in the Caribbean or the United States. Thank you very much again, Daniel, and we'll see you all very, very soon.